But now, sir?
Yes, sir.
Okay. All right. Okay. So some technical problems, I think. So finally, okay. Thank you to everybody. And in the Ernakulam branch, as Chairman said, I am not new to the Ernakulam branch. So I can start off by saying Allorkum Namaskaram also. That much of Malayalam I know. And let me also wish all the other friends of mine who I have interacted with in the past, like Srinivasan sir and all those other people who have been a part of the Ernakulam branch and who have also taken the trouble to attend this program. And I think this is going to be the way we are going to probably start, interacting in at least for some more time, because online session seems to be the only way to go about it. In fact, the chairman sir did not probably mention that the reason for this program came about because of an article which was published in Business
Exactly,
Line.
sir. I didn't mention it exactly.
No, it's okay. Don't worry. I'll mention it, sir. So the moment that article generated a lot of interest on LinkedIn and a lot of people were basically the article was about the NAFRA decision against the auditors of Deloitte. And so I think the moment the chairman read that article, the next day he called me up and said, "Why don't you do a program?" So this program is not about that article. So it's about generally about the independence of auditors itself. So the thing is that I think this topic is becoming more and more relevant as the days pass by. For the simple reason that it's not, it's not because of NAFRA or not because of SFI or not because of ICAI or anything of the sort. I think what has happened now is that generally everybody are looking at the auditors with a different set of eyes. When I say different set of eyes, it means that previously they were saying, okay, auditor is there, he has done his audit and he's gone away. But today they are almost like asking, is he doing his job properly? And there's a lot of information also out in the public domain. So people are probably even more knowledgeable, about what is happening. So this was probably not there in the past. To that extent, I think this topic becomes very, very, significant. And so I'll try to, share whatever little I have studied or read about it and what has come about because of recent regulatory changes. But what we probably cannot avoid and what we cannot probably even, wish away is the fact that people are looking at our audit reports. I'll just give you a couple of things because everybody must have, all of you, all the members who are participating must have obviously generated UDINs and, given a lot of certificates and UDINs and all these things, in the infrastructure sector, for infrastructure sector companies, all the UDINs are being checked independently by the NHAI and their, advisors. They actually go to the website and, we get a message saying that your UDIN has been checked, So the entire profession seems to be moving towards a situation wherein a lot of, cross verification and all these things are probably going to happen, right? I will obviously start off by this Kingston Cotton Mills case, which was given in 1896. And I'm sure all of us as students of chartered accountancy would have probably heard of this case and the fact that the case concluded that auditor is only a watchdog, he's not a bloodhound. And this has stood us probably for more than 100 years. We have kept on saying wherever we have been asked to, somebody has questioned our work, we've always kept on saying that, we are only watchdogs and we're not bloodhounds, courtesy Kingston Cotton in this case. It's actually very interesting what happened in Kingston Cotton Mills. We all know that the justice who gave this decision was called Justice Holmes. We all know that this is what he said, but what actually happened there was very interesting. It was a cotton mill, as the case itself will probably tell you. And there was a manager there. There was a manager there in the cotton mill, in the factory, obviously. And every single year, he kept on increasing the value of inventory without there actually being inventory. And this is, we are talking about inventory of cotton, mills means we're talking about, whatever the raw materials are there for raw cotton and, such other items. which the auditor obviously did not have much of experience, did not have much of technical expertise to sort of even audit or verify. And because that person wanted to show good results, he kept on showing inventory at a pretty higher level than what it was. When the auditor drew up the balance sheet uh, for the inventory, he has just put in this word saying that as per manager's certificate. This is the word which he used in the balance sheet. And in his report also, he said that the inventory is as per the manager's certificate. This was obviously discovered after some time, and a lot of people, started questioning what is the auditor doing, and that's how this entire thing came up before the court in UK. And there, the judge ruled that the auditor is probably not technically qualified to even check what is the amount of cotton, what is the value of cotton. So he was not wrong in certifying the statements by saying that as per manager's certificate. This is exactly what has happened in the Kingston Cotton Mills case, and that's why he gave this decision that the auditor is only a watchdog and not a bloodhound. But this was 1896. As I said, more than probably 100 years, we have taken protection under this, ruling, and kept on saying that our job is only to. In fact, the word audit itself is coming from a Latin word which means hear. It does not mean see also. It only means hear. The word audit actually means hear. It doesn't mean see. So even by definition, it appears that we only have to hear things and get a reasonable assurance. And the moment we use the word called see, it means that we have to do a verification, and maybe a liability will fasten on to us. Such problems can probably come up. But this was 1896. In 2020, what is happening? People have started using the word saying that auditor is guilty. He did not exercise due diligence. He colluded with the management and colluded with the management also. All such terms are being used. Nowhere are we saying that as per manager certificate is okay. All these things we are not using anywhere in their present day discussions about the auditor. If you go to Wikipedia, I mean, of course, this is the first beginning of whatever we are seeing today. I mean, for all the members, whatever we are seeing today in terms of regulations on the accounting profession, you look at, for example, rotation of auditors. All these things can be traced to this one single company called as Enron, which happened in 2001. Now, the Enron scandal itself can probably merit a separate, virtual CP meeting by itself. But it was a very simple, fraud which was done by not consolidating one particular entity in which there were a lot of losses. In a very simple way, this is what happened in Enron. There was one particular special purpose entity. Enron management purposely did not consolidate it. And this, of course, became a multiple issues about what is happening, what is auditor doing, what was auditor doing. This was the first time that the auditors of Enron, I should probably now say the ex-auditors of Enron, who were Arthur Anderson, who no longer exist today, were actually, found guilty of, I use the word called colluding with the management, right? And they obviously shut down. But when the investigations began, they found that whatever was happening, every single thing was known to the auditor. It was known to the auditor. They had a lot of documentary evidence, email trials, and all those things. So today, what we are seeing, rotation of auditors, Enron, whistleblower policy, because the Enron controversy came up because of a lady called as Sharon Watkins, who whistleblew about the problem, because she went to the SEC and said that this is what is happening in Enron. She was threatened with a lot of things, including death and all those things. But the SEC came in next day and ruled out, saying that anybody who gives information about a company, there should be a whistleblower policy. As members would probably be aware, Sarbanes-Oxley Act, Public Company Accounting Oversight Board, all these came about courtesy because of Enron, right? So this word called as independence of auditors was probably, this particular accounting accident of Enron probably focused a little bit more attention on. The discussion was no longer watchdog, bloodhound, watchdog. It was about, are they really doing their job? Because this was not a fraud of a very, deep dimensions wherein people were colliding with each other and nobody knew what was happening, multiple bank accounts, nothing of that sort was happening. It was just a simple of not consolidating, that's all, right? So they obviously held the auditors to be responsible, saying that how can you say it was not responsible? In fact, the more interesting thing about Enron was that US GAAP at that time in 2001 did not mandate consolidation. Even now, they do not mandate consolidation for a few entities. But the Enron was found guilty of the offense of not disclosing the fact that they have not consolidated. It was not an accounting problem; it was a disclosure problem. So they said that you have not disclosed what has not been consolidated. So this was the starting. If you go today and look at Wikipedia, it gives you a whole list of entities wherein there have been, you have to just do a Wikipedia search for accounting scandals and you get this huge list. And actually, the list is much larger. I have taken only from 2008 up to 2020. Right? I have not gone beyond 2008. There are a huge number of companies, and 2002 seemed to be a really problematic year because a lot of companies in 2002 had these accounting issues. You can see Satyam's name here, and you can probably see a few other, not Indian companies, but companies that are known to you. For example, you can probably look at Lehman Brothers was another major issue which happened here, and Olympus Corporation in Japan was another major problem which took place. If you look at the last column here, you would find that they have also given what was the problem, right? You look at, for example, falsified accounts in the case of Satyam, right? Overstated profits in the case of Penwest Corporation, revenue recognition problems in the case of Tesco. All these issues were probably, areas wherein the auditor could have just discovered that something was wrong. We're not saying that he should have discovered the extent of fraud and all those things. He should have probably known that something was wrong and drawn the attention of the shareholders. That is what everybody is now discussing about. Toshiba was again, this construction contracts, your AS, Ind AS 11 on construction contracts, which stated that you will have to recognize the losses upfront. That was not done. So many of these controversies resulted on the fact that it was a blatant violation of accounting standards. The moment we say that, I think we should probably say that, okay, maybe the auditor is involved. Why has he not drawn attention to the management? Why has he not written this in his audit report? We will come to the audit report a little bit later on, but you can see that these things are increasing. And you have an entry in 2020 also, a company called as Wirecard, which I'm sure that many of the participants will have probably heard of this thing, which has happened very, very recently. There are a couple of things which have happened this year, also which we'll talk about. See, Wirecard was, I should say was, because they've applied for bankruptcy in Germany right now. They were probably a bigger version of Paytm, if you want to put it that way, a bigger version of Paytm, and they had their own cards also, apart from payments which could be made online. They had their own cards also. And one point, this was more like a Satyam situation, and another company called as Parmalat in Italy had the same problem. 1.9 billion euros bank balances in the Philippines and Malaysia, which the company claimed was there, was actually not there. The bank balance itself was not, it was a very simple, problem of bank balance not being there. This was actually happening for the last almost about 4 or 5 years. And there were a lot of press reports which kept appearing the last 3-4 years saying that the accounts are not okay and there's some problem with the accounts. A newspaper called Financial Times in London actually did a report on this about 4 years back and said that there seems to be something wrong in these accounting because and we should remember that this was a company which taken a lot of money from PE investors, it was listed on the German tax. So they had a lot of pressure to, present the necessary results, if you want me to put it that way. Now you can see that the second part of what I've written here is talking about what the auditor has written now. The auditor has now written that the clear indications of an elaborate and sophisticated fraud involving multiple parties around the world, adding even the most robust and extended audit procedure may not uncover collusive fraud. This is what the auditor is given now in the month of April 2020, once all these things came to light. The auditor probably thought that he is, probably going to be saved by mentioning this. But this turned out to be, actually against him, because what people are now asking is, when the newspaper report was published and you were the auditor, your audit report did not speak anything about this possibility. We are not talking about, again, the fact that the company will, apply for liquidation, all those things. The shareholders were not even informed that there is a possibility, wherever it may be. It can be in the qualification, emphasis of matter, key audit matter, other matter, anywhere. You gave an absolutely as clean as snow audit report. Why is it that now you are saying it's a very elaborate fraud? So this is sort of going back against the auditor. But why this case also becomes a little bit more worrying for all of us is that this is a new age tech company, right? Wirecard was probably existing for the last, probably 20 years they've been existing. But they were doing some very small, investment business. Only now, over the last 4-5 years, they've become really big by doing all this, online transaction and cardless transactions and all these things. It is definitely worrying, because if this is a new age company in a location wherein, technology is probably, very, very robust, if it can happen to that company, it can probably happen anywhere. So this is where, again, the question of independence would definitely come in here, because nobody is probably going to ask the auditor. As recently as probably March 2020 or June 2020, the auditors were still giving clean reports. Now, they may obviously have the reasons for it. They may obviously have the reasons for giving a clean report. They may say, I've taken the necessary, evidence, documentation, comfort, all these things we can probably say. But as I said earlier also, I think now the people are looking at us with a different set of eyes. They expect that somewhere we should have probably written this in our audit report. So this becomes a more complicated problem, because we are talking about, new age companies which are, under the pressure of investors. I will give you all one more example, and this example is, again, very, very interesting. Of course, nowadays we should not talk. We should generally not speak anything positive about China. So I am also not going to talk positive about China. This was a company called as Luckin Coffee. Again, was because they've also applied for bankruptcy now. This was listed on the Nasdaq. This Chinese company has got a very strange, way of doing things. They will not list in China. They will go to the US and list. And the US also seems to be welcoming them, saying that, okay, this is an open economy, so we'll list in the, we'll list all these Chinese companies. And right from probably the last 15 or 20 years, Chinese companies were not very, what should I say, popular, or they're not very famous for corporate governance. They somehow had a lot of related party transactions between them. Not much of disclosure was happening. There have been plenty of companies in the US also who have, had such issues because of their corporate governance practices. Now, this, probably all of you will know that China, Google doesn't work in China. You don't have Uber in China. They have their own, people who are doing it. You won't even have WhatsApp in China. They have something called as WeChat. So this company, Luckin Coffee, wanted to become the Starbucks of China, because Starbucks was not obviously permitted to operate in China. And Chinese population, coffee drinkers, a lot of business. They set up stores all over the country, and they had about 3,000 or 4,000 stores, if I'm not wrong. And they kept on, saying that our sales are growing. Apart from basic coffee, they were also selling something like, probably biscuits and other stuff also. Things were going well. Again, same problem. Listing on the Nasdaq. Private equity investors wanted, numbers to be shown. Numbers were obviously not being shown. So this company decided to do something very, very interesting. What you are seeing on the screen is a WeChat message to the operating store managers group. On the operating store managers group, as you can see there, it's been translated. This is official because this has been, come out in a report by a research firm called as Muddy Waters. they actually translated this and put it here. You can see what they have done here is that normally, and again, most of the members, since they'll be probably very popular, very familiar with the GST invoicing, typically your sequencer invoices should be serially numbered. It's very obvious. After 101, you should probably get 102. This was happening. This was happening in the case of Lucking Coffee. But what they did was, after this chat message, they said that we'll start skipping numbers. So 101 will be followed by 103. 102 will be shown as bread sales or some other sales, which was obviously not being accounted for in the books of account, or it will come in a separate description, not in the normal ERP system as such. Through the skipping of these vouchers, they were able to boost up their sales. There was obviously no cash there for to justify those sales. So they started building up their cash balance also, artificially saying that this much of balance is there. Again, this is not reflected by any proven evidence of cash balances lying in any bank account. This, at least I told you all that the Enron and all those controversies were big issues, but again, being a Chinese company, they did a very foolish mistake, which any Indian chartered accountant would have found out within 5 minutes, right? They did a very stupid and almost foolish mistake. They increased the sales of coffee, and just like India and China, you've got different GST rates for different products. By skipping these vouchers, they increase the rate of income, revenue from all these products. They did not think of increasing the VAT or the GST, which was charged on these items. So people started questioning, how is it that your revenue from biscuits is so higher, or increased so much, but your VAT is the same, or your GST is the same. A further inquiry was done, and again now, this has become a problem wherein they have probably applied for bankruptcy and they said they're going to shut down stores, applied for liquidation and all these things here, right? So this was again a very interesting. So the question which probably falls on all our heads today is that the auditor should have probably gone deeper and checked that was the fact of skipping these invoice numbers a serious lapse in internal control. This should have been asked by the auditor. He did not ask this question. So you can see how it is again coming back to the auditor. The question is again flowing back, saying that okay, this is very nice. It was noticed now. The company is okay, going under liquidation. All fine, perfect, no problem. But this sort of messaging or this sort of internal control lapse, why is it that the auditor could not point this out? So it was sort of falls back upon him in a different way. We will now come to a very theoretical definition of independence. Of course, we all know as members, as chartered accountants, as professionals, we know that independence is only a state of mind. Okay, this cannot be regulated. You cannot teach independence in a, like in a yoga class, you can't teach independence. This is either you have it or you don't have it. And let me also tell the members that though we always say that you should be independent at all times, at all times, the moment you get up in the morning, throughout the day, as you are doing your work, you should always be independent. This is what everybody is expecting, right? But the true test of independence comes not throughout the day, at one moment in time, when your client is asking you to do something which you are not very comfortable with. When your client is asking you to sign something which probably you are not having necessary documentation. This is where your exercising of your independence will be tested. I'm going to use the word called tested very frequently in this presentation because it is very obvious that at given situations or given certain moments of time, it is very important for us to know that are we acting independently or not. It may not be required, as I said, throughout the day. The definition of independence is that you should have freedom, not being controlled, not being influenced. This is a very theoretical definition. But if you just apply this in your, in the profession in which we are in today, you would find that these three things, not being controlled, not being influenced, also having absolute freedom over what we are trying to do, is exercised only through what we do. It's not what we do not do, what we do, in the sense that the report we issue should speak of our fact that we have abided by all these three qualities. We've got freedom to what we want. We've got not being controlled. We're not being controlled by anybody, not being influenced by anybody else. The ICAI has always, you can always depend upon the ICAI to have a document for anything to do with the profession. And for a long time now, they have had something called as guidance note on independence of auditors. Though I have said that, independence cannot be taught in a classroom or, in a session like this, but we can guide you to what is independence. So we cannot teach that to you, but probably we can guide you to say that, these are what you should probably follow for independence. Interestingly, this guidance note has not been revised too many times, which only goes to show that the ICA has only got one view of independence, which is that the auditor has to be independent. Unlike other guidance notes on technical matters, which have been probably kept, being revised on quite a few occasions, this particular guidance note has probably got only 2 editions till now. And what this guidance note says is that these are the threats which an auditor would face. These are the threats to his independence. We should ensure that these threats are not there. They're basically talking about a self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. For members or for participants in this program, you would know that, you'll probably be happy to know that exactly these same threats have also been repeated in the revised Code of Ethics of the ICAI. We exactly have the same threats repeated there as a Code of Ethics, saying that you should probably try to ensure that these threats are not there, right? I will go by what we would know very commonly, by what is probably more applicable to all of us who are probably, small and medium sized firms, not very large firms. So we'll go by what threats we are most familiar with. The one threat which will definitely apply to all of us is the threat of familiarity. We cannot, ignore this fact. We cannot say no to this fact, but the fact is that clients are very, very familiar with us, and so are we with them, right? The ICA has given a very nice expansion to this by saying that you are having the threat of familiarity if you are too sympathetic to clients' interests. You now put in the word called as independence, you would find that if I am very sympathetic, also it becomes a question of not being independent. We know this day in and day out. I'm not going to give all of you all, too much of what you can say, negative views about what these things are, but the fact remains that on certain occasions, clients may ask us to do certain things only because of their familiarity with us. It is not how we acted in the past. It is not the amount of fees he's going to pay to me. He may probably pay a separate fees for this particular thing which he's requesting for. It is not that. It is just that he has got a certain level of comfort with you. He knows that if he probably asks you 3 times, you will probably turn sympathetic. So this threat looms large for all of us because every single phone call from a client can probably result in a threat of familiarity. We will come to how we can probably also avoid this threat. Intimidation threat. This thankfully will not be there in many cases, but wherein the client is deterring us from acting objectively. Rotation of auditors, non-payment of fees, all these things can be intimidation threats. This hopefully if is not there, because if you are sympathetic, you'll not be intimidated. So I think it's these two things work together. The first part, self-interest threat, is also very important because over dependence on the client for fees. We are not talking about the amount of fees here. We are talking about the fact that for your organization, the client and probably all his, we can probably use the word called as group companies, are giving such a significant amount of fees that maybe you are not acting independently. Again, the revised Code of Ethics is giving an amount of 15%. They say that out of your total revenue, if 15% or more comes from a single client or groups of the single client, you would have to probably, think that it got a self-interested. The code of ethics again does not say that please give up the audit. The code of ethics has got a very nice solution. They say that please go and inform the client that you are getting more than 15% of the fees from him, and there is a self-interest threat here. He may not, want to, give you the work, but you should tell him that I still wanted to bring this to your attention because this is what the institute's code is saying. It is not going to affect my independence in any manner. If you're able to convince him about this, I don't think you should probably fear about the fact that you're going to tell him about this, right? Advocacy threat. Becoming client's advocate in litigation and third-party disputes. This is, of course, we normally, since we'll not, get into the situation on a very regular basis, but it so happens that if your client with whom you are very, very familiar has got an income tax appeal before the ITAT, and you sort of want to go with somebody who's the advocate to, or even the High Court to sort of, advocate the client's cause, it is very obvious that because you are familiar with him, you may take his side. That appears to be a threat. That's what the ICAI is trying to say, And as far as the self-review threat is concerned, they're talking about not having any sort of a relationship both the ways. You should not have been employed by the client's organization. Similarly, anybody who's employed there should not have been working for the auditor for the last 3 years. At least the general average norm is 3 years. This is what the ICAI very long back, it's not about the revised code of ethics, very, very long back, had probably said these are possible threats to the independence of the auditor. They have also said that you cannot mitigate the threat completely. You cannot eliminate the threat. You can only mitigate it. None of these threats can obviously go away. They'll obviously be there. Integrity objective is obviously fine, but they have devised a very new word for this called as professional skepticism, which means that however familiar you are with the client, however well he knows you, we know cases wherein the client has been with the auditor for almost about 25, 30 years, and they are almost like family. That's what many of the the chartered accountants who have been practicing for a very long time tell me. They said they're almost like family. So the client knows everything about you. Similarly, you know everything about the client, but the guidance note and independence says that even if that is the case, please act with a little bit of professional skepticism, which means that when you are discharging your duty, maybe you should probably say that just because I know him, I cannot assume that everything is all right. All the accounting accidents I told you about in this Wikipedia page, you can probably come down and pin it down to this one single factor saying that the auditor probably did not act use this word called as professional skepticism. Let me also tell all the members here that on hindsight, I can find out a lot of mistakes. I can say the auditor should have done that, should have done this. On hindsight, today sitting here in Bangalore in my this thing, I can probably tell all these things. What is probably important is what happened at that particular point of time, right? Did he exercise independence or not? That's why I said it's a momentary decision. If you are not taking that decision momentarily, then you have a real problem because we could end up in multiple situations, And as we all are probably familiar, if you do a mistake once, that mistake will continue forever. If you don't do a qualification 1 year, don't put an EOM in 1 year, that mistake is going to probably continue forever. It's because the client is obviously going to say, you didn't do it last year, why are you doing this? Right? So this professional skepticism word is very important. It's not, we're not talking about doubting here. We're not saying doubt the client. We're just talking about a situation wherein just be a little bit more diligent in the discharge of your duties. That's what we're trying to say. So this is what, again, the guidance note has probably told about. And I just wanted to I just put this in because, I wanted to tell all of you about the last part of it, where the auditor feels that his independence is jeopardized. He should refrain from accepting that assignment. A very long time back, we used to probably say that it is very easy for the ICAI to say this, but my bread and butter depends upon this. How can I refrain from doing assignments, right? A long time back, we used to say that this is what very nice for ICAI to say this, but he's going to pay me my fees. Why should I refrain from it? I'll take the necessary precautions. Right. So, but this has been used in the guidance note. The Public Company Accounting Oversight Board, which incidentally came in after the Enron episode, and after the all the SEC investigation. What you are seeing today in NAFRA is a very limited version of PCAOB. They called it as Public Company Accounting Oversight Board because they wanted an entity which can regulate both the auditors as well as the companies. Though I should tell all of you that most of the cases, the regulation has only happened on the auditor, not on the company. PCOB can ask for audit files like your peer review. They will comment on the audit files. They will ask what conclusions you have reached. If any of the members have had a chance to look at the NAFRA reports, you will find that that is exactly what has happened there also. Though NAFRA is probably not as advanced as the PCOB, but this one they are only starting off, so they'll probably take some time to get there. But the PCOB has done a lot of such audits. They do this day in and day out. Auditors, so there is no peer review apart from the PCAB review. If you have got a PCAB clean report, it means that your documentation is absolutely okay. Your independence is not compromised. Your auditing standards and your auditing techniques are just, very, very good. Getting this negative report from them, getting this positive report from them, is of course involves a lot of, effort and all those things. But anyway, that's what. So they have said that in AS 1005, they have said that independence and mental attitude without bias should not lack impartiality. If you look at independence, we'll keep on circling around the same words only. Mental attitude without bias should not lack impartiality. We'll keep on coming at this. So there can be a dozen different, theoretical definitions for independence. But you see, what they have said here is that independence does not imply the attitude of a prosecutor, but rather a judicial impartiality that recognizes an obligation for fairness, not only to the management and owners of the business, but also to the creditors and those who may otherwise rely upon the independent auditor's report, as in the case of the prospective owners or the creditors. They have used again some very interesting terms there. I will just wanted to emphasize to members this word called as obligation for fairness. They are not saying true and fair. Again, they are not saying true and fair view. They are not saying correct. They are not saying true and correct also. They are just saying that obligation for fairness, which means that there can be situations wherein we can go both ways in terms of decision making. The company has decided to go one way, we want to go the other way. You got to be fair there and probably look at the meeting ground somewhere in the middle. You're not going to prosecute, means you're not going to say, I'll not do this at all, nor are you going to say that you can do it completely. So some sort of a fairness, what has to be built in, we sometimes use the word called as balance. You have to balance the interest of the client with your own interest and interest of others, right? So you have to do this balancing act between the interest of the client. And if you dig a little bit deeper, you will find that this is hitting us every single day. It can be a provision to be made. Company does not want to make it. As an auditor, you are saying, Ind AS 37 says you definitely have to make a provision. AS 29 says you have to make a provision. There is an obligation. Company does not want to make the provision because they're saying, if I make a provision, I'll again have to do TDS on that. If I do TDS on that, I'll get disallowance in income tax. It doesn't benefit me in any way at all. What is your obligation for fairness in this? If the company does not provide for it, you will have to put it as a key audit matter or probably put it as an emphasis of matter. Again, as I said, I'm not saying that you should definitely do this. The company will probably provide, or the company may not want to provide for the entire amount at one shot. They may want to provide for some amount. They'll say, let me provide 1 lakh of rupees this year. I'll gradually increase my provision. You should look at fairness there again. Is it fair to do this or not? I think that is where your obligation for fairness will come in. The Companies Act 2013 tried to also do a lot of work, as the chairman was saying, on the independence of auditors. We all know that the Companies Act should probably be renamed as the Satyam and Sahara Act, because this was a reactionary act. This was not an act which was formulated with a lot of intention to change company law in India and all those things. This was a reaction. There's no doubt about it. This was a reaction to Satyam and Sahara. They use the word imprisonment probably more than the word company itself in the Companies Act. Every alternate section was saying imprisonment, imprisonment, imprisonment. On independence, they brought in this concept of rotation of auditors. See, this concept has been discussed probably from the time of 2001 itself, and Enron happened, saying that the threat of familiarity can probably be mitigated if auditors are rotated. The European Union came out with the concept of joint audit. Don't let one auditor to sign the accounts. Let there be a joint audit. One very big firm and one very small firm or a medium firm can do the audit jointly of an entity. This is what the European Union came up with. We have said that rotation 2 terms of 5 years each. This obviously happened because, as I told you, Sahara and Satyam, all these companies had issues with auditors, and again, the question was how guilty were there. I think were there. I think that is what became a bit of an issue here. But if you look at it in a very different perspective, right? If I am the auditor of a company and I really want to not be independent, I need not to be independent in year 2 itself. I don't have to wait for 10 years to prove my non-independence. I can get familiar with the management in year 2, year 1, year 3. The Companies Act says that you will have to be there for 10 years. You can be there for 10 years. I'm not saying you have to be there. There are provisions for removal of auditors also. The same section 139(2) also said that nothing contained in the subsection shall prejudice the right of the auditor to remove the auditor from the right of the company to remove the auditor, or auditor to resign from the office of the company. So there are two different things here. You can see what has happened is that I am the auditor for 10 years. New company, startup company started now, they appoint me auditor. For 10 years, I'm going to be the auditor. Assuming that everything goes as per plan. They can remove me, I can resign at any point of time. That clause is also built into the same section of the Companies Act. So they have said basically that you will try to be independent doing this rotation business. This is only as a sort of a arrangement to ensure that you know that at the end of 10 years, somebody else is going to come into your shoes. They are going to look at your reports and maybe they'll comment what auditor this fellow has done, what audit this fellow has done. That guilt feeling should probably be there. That is why they are saying that it will be 2 terms of 5 years each. But again, as I said, that this is only a mechanism to put in some sort of a control over the fact that you are not going to be the auditor forever, and the threat of familiarity can probably be minimized. What does the US say? The US says that partner should rotate. They have something called as additional partner there, who is like your audit manager, but the additional partner should also rotate here. Partner rotation is mandated in the US now. RBI, incidentally, for NBFC says the auditor, the signing partner should rotate once in 4 years. Though the Companies Act says 5 years, RBI for NBFC audits says that the signing partner should rotate once in 4 years. So this is there in bits and pieces in the Indian laws also. Why is this important again? Just like the audit firm rotation, there is an impression that looking at the audit from a different set of eyes through a new partner can probably remove the threat of non-independence. It is not that the partner is going to be very familiar and tells the other partner that, I've been very familiar with the management, this is what I've done on this. This is not what the laws are trying to sort of resolve. If I look at the provisions or the accounts with a different set of eyes, it is possible that I may probably find something which he has not found. Maybe my judgment is different. Maybe his judgment was different, right? So the partner rotation is a part of, and as a best practice, you can probably do this in your firm also. You can choose, say, partners whom you can rotate here. But the moment this provision came in the US, the smaller firms like all of us said that we have got only 3 partners, we have got 10 audits. What rotation can we do? So the SEC came out with the rule for that also. They said that the smaller firms should be subject to an SEC audit once in 3 years. That also they have ruled out, saying that don't worry about rotation of the partners. You continue being the partner, not a problem. You may have a threat of familiarity, whatever it may be. You continue being the partner, but SEC will audit you once in 3 years. So even for the smaller firms, they have given some sort of backstop provision saying that okay, we need not rotate the partners because you don't have so many partners to rotate, which is perfectly understandable. You will probably have to agree for an SEC audit once in 3 years. So you can look at a similar provision in the Indian context, is not there right now, but as a best practice. In fact, there was a very good discussion paper which was given the European Union. I mean, many of these regulators, I told you, have been discussing this for quite some time. When this rotation came, the European Union gave a recommendation that the entire audit team should change once in 3 years. The entire audit team, right from audit manager, article clerk, whoever it may be, should rotate once in 3 years. From the auditor's point of view, from the company's point of view, the person who is giving the information to the auditor should rotate once in 2 years. This was the recommendation given by the European Union, but everybody shot it down saying that you're assuming that I've got 45 people in my company. We do not have it. I've got 3 people in my accounts department. I cannot keep on rotating them because they have other things to do also. But this was shot down because of that particular limitation factor. But they came out with this excellent suggestion saying that if you can, you try to change the audit team itself. And from the company's side, you try to change the person who is providing information to the auditor because it is possible that the previous person was trying to hide the information, or he was not able to provide the information because of some vested interest, whatever it may be. I mean, that doesn't, but unfortunately, that provision did not come because many of these firms and the companies objected, saying that we don't have the resources for this, we can't really do it, right? Now, this, of course, all of you are aware of. Who cannot be an auditor? Body corporate, has a business relationship in the company, and person has any direct interest in the company, or person who's in employment with the company, all these people cannot be auditors. And as far as investment service, investment services are concerned, we have got this list of services which cannot be done by the auditor. This is again as a part of the Companies Act itself. Now, if you look at this services a little bit too carefully, right? Accounting and bookkeeping, okay, in the present day and age, I think that's a separate division by itself, so we not worry about it. Internal audit will definitely not do. Design and implementation of financial information system, again, as long as Tally is there, we don't have to worry, about too much about this because Tally does everything for most of our clients. Tally does a lot of the work. But what happened in case of ILFS, and what drew a lot of attention of the NAFRA and also SFIO, was this word called as management services. What is this management services? Not defined in the Companies Act. It could mean probably anything. It probably mean anything, right? You look at what has happened in ILFS, and I'll give you those, those data a little bit later on. The NAFRA has sort of, questioned the auditors on the fact that what is this management services? I'll just give you one example. There were the auditors of one particular, ILFS company. For another company, which also had a equity stake in this particular main ILFS company, it did the Ind AS conversion and charged some 44 lakhs or 45 lakhs. NAFRA has been saying that this is management services. The Companies Act cannot tell conversion to Ind AS because that is not, that way you can think of so many things which you cannot do. You are providing a service to the management by doing that Ind AS conversion, therefore it is ineligible services, therefore violation of Companies Act, therefore independence has been questioned here. There was a very interesting discussion also abroad, and which again will probably be of importance to all the participants today. The question raised was, am I being not independent if I do both statutory audit as well as tax audit. Or I won't use the word called tax audit if I'm also providing tax services to the client. Is my independence being compromised? This discussion also cropped up in the United States of America. And they reached a very interesting and probably nice conclusion. They said that just by filing the client's tax returns, or maybe, okay, fine, also signing the audit report, we are okay. We don't have any problem as far as independence is concerned. Because basically, what are you going to do? You're going to file on the basis of what information you only audited, right? You cannot, read misinterpret any of the provision. But they said very interestingly that you do all these things, but please don't represent the client before the tax authorities. Because there you may also have a problem in terms of advocacy. You may want to advocate for your client saying that he is definitely right, the department is wrong. They came to this very interesting conclusion because they said that as long as you are certifying your tax audit report, and suppose the department has issued a notice and you have not, the department's view and your view are clashing there. If you do go on appeal, advocacy that is there because you are always going to insist and maintain that I was right, department is not. So they have said that in case you get into such a situation, please give that representation work to somebody else. Don't do it yourself. Only then you will be independent. You may be found to be wrong. Correct your next year's audit report. Don't continue going to the tax court and keep on justifying saying that your client is right, because even if you lose the decision, your threat of independence is always going to be questioned in these cases. Thankfully for auditors, the Companies Act has not used the word called as imprisonment. But very interestingly, they have used the word called imprisonment for an officer in default. Any officer of the company who's in default, auditor cannot be imprisoned. But I'm talking about the Companies Act. Auditor can be imprisoned by the SBI and SFIO and other people also, right? But from the Companies Act point of view, an auditor cannot be imprisoned. 25,000 rupees to 5 lakhs of rupees. But probably the most, interesting provision in the Companies Act is that if an auditor is found guilty, he will have to refund the remuneration received from him by the company, from the company. This was not there previously. This is adding, insult to injury types. You are not only going to punish me, you are not only going to, make me pay a fine, but you are also asking me to refund the amount of money which I received from this particular company. So it's like adding insult to injury. So this also is in the companies. Which brings me to probably a slightly, different the particular slide for this, but there is always this, risk versus reward ratio, which I'm quite sure many members or many participants will probably understand what I'm talking about here. For the amount of risk I'm taking as an auditor, the reward is extremely low. When I'm talking about what I'm talking about fees, right? The risk I'm taking is probably X, and the reward I'm getting is probably just X minus 2. I mean, depends on the client also. If I get a very high fees, does it mean that I'm going to be absolutely independent? Does not. Does not. But the reason why your high fees can be justified, is because the higher fees you get, there is an inbuilt assumption that you will be able to have all the necessary resources to meet or to do or discharge your duty as per all the technical standards or guidance notes as the case may be. That seems to be an inbuilt assumption which is there. So, of course, this is obviously not something which is, I mentioned this in many a forum and I'll repeat it here also. The fact remains that as long as the client is paying our fees, we cannot be 100% independent. I think we have to accept this as a fact because this has happened with the credit rating agencies, happened with merchant bankers also, and a lot of other people. This discussion has happened here. I am not talking about the dependency factor here. I may have 1,000 different clients in Cochin. no problem at all. And all of them may be well, spread out and paying normal fees also. It still remains a fact that he's the person who's paying me my fees, right? It doesn't matter that I've got more less than 15% from a single client. I don't have any independence threat at all. I mean, all this is perfectly fine. The fact remains that as long as he is paying my fees, there's just this iota of a chance that maybe I will be sympathetic. The word used was called sympathetic. Maybe I'll be sympathetic because, irrespective of the amount, he is the person who's paying. So this risk reward ratio can probably be skewed towards the lower side. Will have to be balanced. As all of you probably know, I mean, again, this is something which many chartered accountants have been discussing for long. Concurrent audit of banks, right? Risk reward ratio is absolutely horrible there, right? You look at the amount of work you've got to do, look at the responsibilities, and look at the reporting requirements, and look at the fees, no correlation at all, right? People who have refused such assignments are doing good. I mean, they're doing a good, they're doing the right thing also, because you really can't justify there. And it is a sad fact that whatever we are seeing today in terms of ILFS, you're talking about all these other companies also. Somehow or other, there has been some bank which has been involved. You know, I'm not saying that the bank was a part of the fraud, but it is obvious that the bank was involved in that particular transaction. They may not have gone dug deep here. As a concurrent auditor, the risk is humongous. Reward is very, very, very less. There are a few friends in the profession who tell me that even if I'm giving 2 lakhs of rupees per month for concurrent auditor, I will not take audit, because that is the amount of responsibility which has been placed upon us. Right? But again, we have to use this word called as safeguards. Safeguards. There is always this link. As long as the client is paying the fees and as long as the fees is very, very low, I don't think we'll be able to justify the fact that we at all times acted independently. The session is also about other regulators, and from time immemorial, at least as far as I can make out, from 1996, when the Narayana Murthy Committee was appointed, SEBI has always been pushing and giving us corporate governance reports. 4 or 5 committees have been formed. We had the Naresh Chandra Committee, we had the Narayana Murthy Committee, we have now have the Uday Kotak Committee, but I think the Uday Kotak Committee has probably given a very detailed, report, and I'm going to pick up only a few points here in the interest of time. Again, related to auditors and with a direct link to the independence of the auditor. You look at the first point, very well mentioned by the Uday Kotak Committee. They're saying that independent external opinion at the cost of the company, right? Let us say that you are having a fair valuation problem with the company. The fair valuation given by them is not correct. If this is implemented, the auditor can say that I don't agree with your fair valuation, or I have got some sort of a reservation on this fair valuation. Let me get an independent external opinion at the cost of the company, and the client will always have to pay the fees for this, right? The first independence comes here, right? The opinion you're asking for should be from a truly independent person. It should not be somebody whom you know, right? It should be from a truly independent person. This is your first test of independence in the recommendation itself here. Though we were talking about joint audit in the European Union, Uday Kotak Committee, and this is a direct result of ILFS. The Uday Kotak Committee has said that I have one auditor for the entire group. This is not going to be definitely agreed to by SEBI, and this is not going to come also. But we can understand where Uday Kotak was coming from, where the committee was coming from. This entire ILFS controversy, I mean, many of you have read in the newspapers, 239 subsidiary companies. Nobody even knew how many subsidiary companies were there. Somebody said 45, somebody said 200, somebody said 245. The problem in ILFS was not about consolidation. The problem in ILFS was that one group company called as Gujarat Pipavav Port, PIPAP Port. In this Gujarat Pipavav Port, the auditor had given a going concern note, a qualification of the going concern. And that auditor was not the statutory auditor of the entire group. He was a different auditor. The group auditor probably should have seen it. I think he would have seen it. Somehow, for whatever reason, the going concern concept did not feature in his audit report. In the consulted audit report, the going concern qualification of that Gujarat PIPA report did not feature in his audit report. The summary of this entire, ILFS was more than a fraud. Actually, initially it was only a cash flow problem. Later on, we discovered that a lot of money has been diverted now these days, right? It was only a cash flow issue. They could not manage the cash flows. Later investigations proved that 60% of the losses were from 4 or 5 companies only. Like the Gujarat PIPA report, for example. Uday Kota committee is suggesting that let the auditor for the, because of this issue, the ILFS, let the auditor for the subsidiary company and the holding companies be the same. But this may not meet the 2 requirement of independence, so I don't think this is going to be a provision. Should probably come in for some time, at least. Disclosure of reasons for resignation of auditors. All members will be aware. This happened last year. Suddenly, auditors started resigning. All of a sudden, all listed companies, all listed companies, large companies, auditors are suddenly 1 quarter saying that I'm no longer the auditor. Now, poor SEBI was stuck in a situation where they say, what do I do now? Auditors have resigned. And the reasons which they gave were probably, I won't say not convincing, but they were pretty strange reasons. They didn't tell what was wrong. They said, we are not able to do the audit due to non-receipt of information from the management. In one company, they gave this reason. Management information is being delayed. They did not say what information. Uday Kota committee is saying that please give the actual reason for that particular resignation. Say that revenue figures have not been given to us. Expenses has not been given to us. GST, ITC reconciliation has not been given to us. I mean, I'm not saying you resign for that purpose, but specify what is the reason for that. Don't just say that information is not given to us. They have also suggested that disclose the amount of non-audit services performed and the payment made for the non-audit services, because again, you can see this is coming. You can see that the Uday Kota committee report, many of the provisions are a reaction to the ILFS issue to a certain extent. You really can't fault them, because nobody really thought about all these situations could probably come up in companies that about 3 or 4 years back, right? They have given something called as audit quality indicators, workforce metrics, skill development, training of audit team, audit, how many times has audit been restated, billable hours, audit fines, legal actions, any fines against the firms. Is there any client and group concentration? I mean, are all your clients, grouped together in one thing? Again, the 15% factor will probably come into play. The Uday committee has said that SEBI should bring out these audit quality indicators and metrics. Without criticizing the auditors too much, they have said that skill development and training of the audit team is also very, very important. And this again is a discussion which has been happening for a very, very long time, right? See, there was this very interesting incident which happened in, I think it was in Brazil. It was in Brazil. And it was a petroleum company who had got into a very complicated derivative transaction. I think it was called Brazil SPA Petro transaction, wherein they had booked a forward contract in Brazilian currency, converted to US dollars, and ultimate settlement was happening in some other currency. It was very, very complicated. And they had incurred a very large loss on that, which was obviously not normal cost, but it was a very, very large loss. Now, when this company actually sort of, again went for bankruptcy because the derivative losses were so bad, losses, because again, Brazil auditors, all the people who are in investigative agency, all these people came in. There is a very interesting, translated version of that thing. If possible, I'll probably send it to the chairman. He can probably share it to all of you. They have asked the auditor this question: did you understand this transaction? And he said no. Did you understand that this was a very complicated derivative transaction? He says complication. Understand. Asked him the next question: how did you sign off without understanding what the transaction was? You know about it very, very well. The necessary, techniques to because software is software. We know that very, very well, right? But what two pairs of eyes of a chartered accountant can probably see, no software can see. I'm absolutely, clear on that point, because it only depends on the amount of time we spend and the amount we concentrate on those numbers, right? However complicated those numbers are, I'm sure that, the way we look at the numbers and the way a software does it is going to be completely probably different here. But SEBI is probably trying to, the Uday Quarter company is probably telling the SEBI that ensure that only a certain set of firms who have these things are appointed as auditors of listed companies. Because SEBI is obviously interested only in listed companies here, right? Okay, and then again, they have said that the proposed fees to be paid to the auditor, just a few new clauses which have been given here. And basis of recommendation for appointment, including details here. So this we all know. I've just given you three figures here. I've spoken a bit about ILFS. DHFL was diversion of funds, and I've also put in a very small thing below there. This happened very much in our Bangalore only, and not even 1.5 kilometers from the place where I'm giving this webinar from my house. This is a cooperative bank called as Sri Guru Raghavendra Sahakara Bank. Complete diversion of funds extent of 1,400 crores. And the CEO also had to sort of, he was found, he took poison and, committed suicide and all these things, right? That's a different, but look at this DHFL. We spoke about ILFS, we're not worried about ILFS for now. DHFL was nothing but diversion of funds. A company called as HDIL and DHFL, they had a lot of intercompany transactions. And a lot of bogus companies. When I use the word called as bogus companies, I'm saying that companies probably not with a proper registration number, whatever it may be, were also being made payments, and the amounts are pretty high. The amounts are pretty high, not small amounts, right? The question today being asked is that your job as a housing finance company has been to give housing finance. Why are you giving intercorporate deposits? Again, nobody questioned this, right? The intercorporate deposits were given to entities which probably did not exist, and there was something called as circular trading, round tripping, which went all over the place and ultimately ended up in real estate, right? Now, the question all of you are probably going to ask me is that, is this the auditor's job? Is it the auditor's job to check this round tripping? Can he go behind the source of funds and end use of funds? It is not. Definitely it is not. Let me be very equivocal in that answer. It is not. However, we should not forget the fact that courtesy all this round tripping, they say this thing, right, that every robber reads some trail in his accounts, in his this thing here. There'll always be something in the financial statements. I'm not saying you should detect it, right? I'm not saying this is going to be detection to all of us, but it's very clear that there will definitely be some indicator somewhere. We can make out even from management response saying that maybe there is something wrong here. So all we are trying to all the regulators are probably trying to say is that, why is there no mention of this anywhere in your audit report? We are not asking about the fact that, the fraud should have been detected. I'll give an example of DHFL only, right? One of the companies to whom a loan was given of 260 crores of rupees was obviously what we call as a shell company, or a company which was there, not completely existing there. And luckily, what has happened, the auditor said no confirmation of balance was obtained, right? No confirmation of balance was obtained, and the amount was so large, significantly large. Now people are saying that in your working paper or in your document, you're saying that confirmation balance is not obtained. Why has this not come in your audit report? Key audit matter. You could have probably said that COB from 260 crores has not been received. That would have probably, given a few red flags to a few people saying that what is happening. So the nature of the questions being asked for auditors to auditors now, as I told you earlier, has changed a lot. It is no longer a question that I have seen your audit report. It's a question of why has this not been flagged in some manner in your audit report. As we all know, SFIO and NAFRA both have been behind ILFS. SFIO previously came out. SFIO means Serious Fraud Investigation Office. And after NAFRA has come into the picture, you can see that NAFRA has taken over the job of SFIO. SFIO has done a lot of work in other companies, other listed companies, and other companies also. But I would probably think that after NAFRA has come, the work of SFIO will probably be a little bit more limited. It will not probably be, as active as they probably were, because we cannot have too many regulators also. Let me also tell the members that ICAI has tried a lot to not bring NAFRA into the picture. There's always been objecting to what NAFRA was doing. I have also been a little bit critical of what NAFRA was, because my only objection was that there should not be too many regulators, and we know for the fact that the ICAI can only proceed against members and not against the audit firm, which also seems to be what NAFRA seems to be doing pretty much now, right? But unfortunately, the government was very, very insisting that, they said that no, we will have to bring NAFRA into account. Now, the constitution of NAFRA itself, as they are not a PCAOB, and they only go behind the big ticket cases. They are not going to come to the cases which you and me are auditing. Listed company, definitely yes. A very large private company, depending upon the extent of the problem there, they may probably come in there. But my worry is that if this trickles down to the lower companies, if this trickles down to the smaller companies, and NAFRA starts asking these questions which they are asking, there are two problems which I have, I'm visualizing. One is that, is NAFRA really qualified to, come and ask all these questions? That's the first part. The second part is that from our side, from the auditor side, do we have everything perfectly in order to hand over to NAFRA? I think here a little bit of balancing will have to be done. Both the sides will have to improve on how we are going to present our audit working papers and all the documentation, and how NAFRA also scales up. Now, having done ILFS, I think it's very important to understand how NAFRA scales up. They have formed a technical advisory committee with some, very well-known people like the IIM professor and all these people. All this has been done. But we have historically been used to a fact that all these agencies in India start off very, very well, but after a couple of years, sort of, just, go down in not doing too much of, work. So I hope that doesn't happen to NAFRA, because if it happens to NAFRA, it will be up to the institute now to take this over again, right? So as a member of the institute, I wish it happens to NAFRA, but from the NAFRA point of view, I wish that, they scale up and, do their things, get their act together, so to speak. They have given this in the ILFS report. This report is on the NAFRA website, so members can probably, download it. And AQR is audit quality report, and DAQR comes before this, called as a draft audit quality report here. They have said that audit committee approval for management services has not been obtained. Staff rotation and familiarity threat has also been there. Audit committee of ILFS may have approved it even if it had gone to their approval. Because, in one of the, depositions before NAFRA, The auditor of ILFS said that, oh, we know the management of ILFS very, very well. Our partners speak to them almost every single day. They are very close to us. It turned out to be against them, turned out to be negative. Because they said that if you are so close to them, then obviously your audit also will not be, completely impartial or completely independent. So it turned out to be a certain decision probably should not have made. Of course, there are other factors here, like for example, the auditor ignoring the NAFRA's notices. So maybe that also has prompted the report to be so negative. But we don't get into all those things. The fact remains that you please look at how NAFRA is looking at this thing. They are talking about auditing standards. They are talking about Companies Act Section 149 Management Services. They are talking about all these things. They are going through all these things, right? They're talking about the threat of familiarity, which is a part and parcel of our code of ethics and also a part of our independence the guidance note. You can see what they have written here. The total fee for the 15 engagements was 6 crores. Audit fee was only 4 crores. All the group companies. You can see here what NAFRA is doing is that they are getting into a situation where they're extracting data, mapping it with the code of ethics and also the Companies Act, and saying that you have violated 1, 2, 3, 4, 5, 6 provisions. They're actually doing this job of looking at auditing standards, saying whether violation has come in. Documentation, SA 230. All of us, I'm sure the Ernakulam branch has done a lot of programs on SA 230, right? It still is a fact that your audit file should speak for itself. I think we will have to look at a situation wherein now we will have to start building up documentation, probably have separate documentation teams. I'm not trying to put, a sort of a scare into the members' minds here. That's not the point at all. But I think the time has now come for us as to start defending ourselves. The only thing which can defend ourselves is, apart from acting independently, the only thing which can defend us is the documentation. The document should speak. I'm not talking about audit documentation. I'm not talking about the vouchers, files, and all these things. I'm not talking about the MRL. You will see that both in the PCAOB as well as in the ILFS and other issues what have happened, what has turned out to go against auditor is that what was the reason for certain conclusions not being documented? Why was an emphasis of matter dropped? Why was a key audit matter chosen? Why was a provision not made? Or why was a lesser provision made? The level of investigation or inquiry is going on that to that level they are starting asking the necessary questions. So I think, as I said, we will have to be very careful that our documentation, our audit file speaks for itself here. As the chairman was saying, many of these, I don't want to get into the names here because, again, all these are professional colleagues of me, but they have all been banned for some year and some fine has been put into them. This was, of course, the Delhi High Court is hearing a petition from the auditors itself, and the decision is probably expected sometime soon. But if you were the Delhi High Court and you looked at what has happened, probably you will not, you will probably feel that, somewhere something was definitely wrong. Till now, I have spoken only about the large firms, SEBI, NAFRA, SFIO, all these people, right? And we should be realistic enough to understand that maybe we'll never meet them. I do hope we never meet them because, we may not, I'll always wish that members of the Ernakulam branch get a large audit and listed company audit, but I really hope even then you don't meet them. But our problem is probably going to be more domesticated. It's going to be for MSME practitioners, what should be our guidelines for independence? Okay, we've got a 3-volume code of ethics given by the ICAI. It is humongous, it's huge, it tells you everything you want to know. Definitely it is there. We'll try to follow to the maximum extent possible, right? Because, those are more, when I say code of ethics, it just tells you what you have to probably think of doing and what you cannot do, and how you should act. That is there. But we should definitely know that in our practices or the sort of practices we have, the threats, though the threats will probably be the same, are a little bit more evident also. They will become very more evident because on a day in and day out basis, we've got to face these threats, as I told you earlier also. And how do we perform and do go ahead with these threats, right? These are the threats which I think we all face today as small and medium enterprise practitioners. I've already told you about self-interest. I've already told you about familiarity. I've already told you about intimidation. Right? As I said, okay, intimidation may not be there in many cases. And as chartered accountants, I'm quite sure that if a situation comes wherein you're going to be intimidated, you are definitely going to say no. I am quite sure that all the members of the National Branch will probably choose this as an option. What about the other things? And we'll have to take necessary precautions for that also, right? I'll give you this example, which is happening as we speak today. This is a thing which is happening in our own firm. So I thought I should probably tell the members about this. We've got this client who is a listed company with many subsidiary companies. He's got about 40 or 50 subsidiary companies they've got. And in one subsidiary company, there has been a qualification audit report on going concern and valuation of inventory for 31st March 2020. Valuation of inventory because there was a lot of slow and non-moving inventory, which was not provided for. And going concern was because the losses were extremely large and this inventory itself was not moving. So in 31st March 20 balance sheet, we had the audit report, we had given a qualification. June quarter is coming now. And of course, I tried to limit the amount of things I signed, but my partner who's doing this, he has got a request to withdraw these two qualifications in the June quarter. Justification for withdrawal is that it is not an audit, it is only limited review, and nobody really is going to look at the audit report. Nothing much has changed, but in March and June now, it's almost the same. So can you please withdraw this audit report qualification, going concern qualification, and valuation? So I would have loved to ask the members of Ernakulam branch for their opinion on this, but I think in the interest of time, I should probably not, ask this as a quiz question. So when this was referred back to me, I told the client also this thing, saying that, see, going concern is a state of affairs of the company. It does not depend upon the limited review. If you are not a going concern in March, you are not a going concern in June also. I told him that if we remove this note in the audit report of going concern, it may give an impression that the company has turned around, which your numbers don't justify at all. But he was very, very insistent. He said, no, we'll give you a representation that we are going to, turn around in the next 3 months or whatever it may. I don't know, all those things will probably not help us because we will have to face situations as facts as they are. And the fact remains that nothing has changed much. So this is the sort of, I'm not saying that it was intimidation, it was a request only, right? But we had to act independently at that point. We had to tell them that no, this is not going to be possible, right? This is a very interesting thing. I just thought I'll give it for the benefit of all the members of the Ernakulam branch. This is a very old case though. GP Agarwal, Chartered Accountant, Kolkata High Court. What did he do? He opened a new office in Kolkata. And he put advertisement in Ananda Bazar Patrika saying that opening a new office. In fact, one of his clients congratulated him in that advertisement itself, saying that congratulations, GP Agarwal, for opening a new office in some place in Calcutta. The PDC committee came into the picture. It went to the Calcutta High Court also. And the Calcutta High Court, this ruling, what you're seeing, judgment giving here is from the Calcutta High Court. If soliciting of work is allowed, independence and forthrightness of the auditor that cannot be maintained, and therefore some discipline must be maintained in the profession. They said it is definitely guilty of professional misconduct. I mean, just to give you, this is more a code of ethics case, but just to give you all of this thing here. So I would probably want to again tell that the threats of conflicts of interest pressures are inevitable. As I said, I'm talking about basically the small and medium practices like us, wherein we have these issues of day in and day out. So how do we solve this? What is the position for this? I've got this. I tried to do this in a different way, but it just turned out this way. I think I've put in a little bit of Malayalam also here. I've used this word called as Lakshmana Rekha. I hope the spelling is correct because this is from Google Translate. So if this is wrong, you please blame Google Translate. I have put in here between called as independent and not independent. I put this line in the middle and called it as Lakshmana Rekha, right? This is something which all of us should definitely try to at least practice to the extent possible, right? There is a line below which you should not go, irrespective of however well you know the client. I'll give you an example with this a little bit later on, but still, this is a thing which happens on a regular basis in your mind as a professional chartered accountant who is in practice. Please do not cross this Lakshmana Rekha, and this Lakshmana Rekha is actually client specific. It is not even individual CA specific. You cannot say that for this client I will, have for all my clients I have a benchmark of 2 lakhs of rupees. It doesn't work that way. You should have this Lakshmana Rekha which is client specific. The moment you are asked to cross the line, you should put a stop to that. You should tell, I will not be able to go beyond this. Whatever it may be, it doesn't matter what it is. It could be lesser provision for advance tax, lesser payment of advance tax. It could be ITC credit in your 3B not being taken properly. It could be anything. This happens, as I told you, day in and day out basis. I'll give you an example for this so you understand what I'm talking about, right? Again, a CA friend of mine who is in practice, he was appointed as an insolvency professional in for some company. And it so happened that after this company had applied for insolvency, they got a very huge demand from the service tax department. As all of members will probably know, nowadays service tax department is now becoming hyperactive and giving notices for all the old cases now. I do not know why they are doing it, but 2014-15 for they're giving notices even now to 16-17. So this person got this notice, and it was a very huge. If I'm not wrong, it was around 35 crores. The demand was 35 crores. So the CA friend of mine asked me an opinion saying that you please give me your opinion whether this is taxable or not taxable, so that we can necessarily provide for that in the insolvency committee of creditors meeting. So I said, okay, fine. And I looked through it and I found that some were exempt and some were not exempt. So I gave him an opinion saying that, these are exempt because work done for the Indian Railways and, any of those missions of the government are not taxable. So there is a specific notification there. So I gave him a detailed opinion. And of course, he did not, tell me anything about the opinion as such. But then he asked me what is the fees. And I told him, I don't want to, being a good friend of mine, I don't want to ask you for any fees. You pay me whatever you want. Doesn't really matter. He said, yeah, okay, fine, no problem. And, he said, I'll tell you what is to be paid. Okay, I said. Now he calls me after 1 week or 10 days and he says that I have a request. And the request he had was that, can you change your opinion to say that everything is taxable? I don't know, I cannot do it. Even before I could, think about it, whatever you may say, he actually told me he'll pay some very huge amount of fees. I told him the fees is not material here, they're not the point here. Whatever you pay, I'll not be able to do it. This is the line I'm talking about. Right? This is the line I'm talking about. You can probably say that, okay, these are exempt and taxable, but in your day-to-day practice, I'm sure that all of you will have this situation day in and day out. You should try to see that this is not crossed, right? As far as the audit report is concerned, as I've discussed a little bit earlier also, there is enough and more space in the audit report now to express your opinion. It need not necessarily be a qualification. It has to be an EOM, it can be other matter, it can be key audit matter. The idea behind all these paragraphs is to draw the attention of the management. This is where I told you the conflict of interest will probably throw itself directly into your face, because it is when you are going to put that qualification that the fact that the client is going to pay the audit fees will come and hit you. When you're putting the EOM, the client is going to say that, look, I'm the person who's going to pay your fees. Why do you want to put the EOM? These questions will definitely come up. But as I said, go back to the previous slide, look at the Lakshmana Rekha and see that beyond this, whatever I do, I will not be. It may be difficult. Let me tell you, it may be probably very, very difficult initially to do it. But as I've been maintaining throughout this presentation, I think the time has come for us to probably start looking at this a little bit more dispassionately. As far as the tax audit report is concerned, I only have 2 bits of advice. Limit the number of assignments you take. I know that many of I think that at least it's not happening in Ernakulam branch at least, but I know that somewhere in a place called Siliguri, North India, one CA is doing more than, I think I'm not wrong, 350 tax audits. Don't ask me how, but he's probably doing a lot of outsourcing of these assignments. Also in the tax audit report, please don't interpret the Income Tax Act. You tell the position as it is there. You tell if he is asking for a 43B deduction, you tell what is the 43B deduction. Disallowance. Don't tell that this may not be a part of 43. Don't try to interpret the Income Tax Act. Try to express what you feel is your opinion. That's what we should probably try and say. As far as the independence testing is concerned, the revised CARO is going to present a challenge to all the members because we are going to face all these issues. All title deeds are in the name of the company. Requirement of CARO. Purpose for which the loans were obtained. If not, the amount of loan diverted. This clause will definitely have to be removed from the CARO. No auditor should be asked to comment on this. How will I know what is the amount of? It's almost like forensic audit, right? This will definitely have to be, removed. I think the necessary representations is being done here. But you also look at this from a more difficult point of view. How are we going to even check this thing? Even if we are asked to do it, how are we going to check this thing? He gets a term loan for plant and machinery. He puts the term loan for plant and machinery. That some balance may be there. How do I know where it has gone? It may have gone for working capital. This is going to be a tremendous issue for members to this thing here. Again, here a lot of independence requirements could probably be tested. And they have also tried. Again, you can see this revised CARO, this requirement is also again because of ILFS only. Purpose of funds obtained to meet obligations of its subsidiaries, associates, and joint ventures. Related party transactions. This is where I'm going to think. In terms of COVID situation itself, I mean, generally I'm talking about what could possibly happen here. Areas where independence will be tested for all of us today are going to be definitely impairment. See, very surprisingly, and I've been saying this in a couple of forums also, your CARO report does not have anything about impairment. It only has something about physical verification of fixed assets and FAR. It does not talk about impairment, right? So Article 12 going forward will never look at impairment at all because it's not been asked in CARO, right? Impairment will definitely be a thing which all of us will have to worry about, as will be going concern. And I think that in case you have audits of private limited companies or limited companies or listed companies also, please look at the disclosures and not only the disclosures and also the what you can say transactions between related parties very closely. Many companies during the lockdown could not even operate their bank account. They have chosen to take loans from sister companies. They have chosen to take loans from management, right? Please look at RPT transactions a little bit more in detail because again here, there's going to be a post-mortem. You're going to do this after the audit is, after the transaction has been entered into. Whether the necessary disclosures have happened or not, whether everything has been mentioned properly in the report or not, or whether accounting has been done at, whatever, Ind AS or AS, whatever it may be, fair value market accounting, or whatever those provisions are in those standards, please ensure that those have been followed. I think this is where these three areas would definitely hit us a lot in our present situation. Okay. So I think with that, I have probably come to the end of the presentation. I will definitely take questions. I'm sure that the members will be having questions. I will probably hand it over to the chairman or anybody else to ask the necessary questions. Thank you very much, sir. Thanks a lot. Any questions are there? I'll definitely answer. I think the questions will probably be in the chat box, is it?
Yes.
No, it's
Question answer box.
Q&A box.
Q&A box. I know. Where's the Q&A box here? Let me just see. Where's the Q&A box?
One question is there any restriction the same person appointed as auditor of a parent and its subsidiary company wholly owned or not?
No, there's no restriction. No restriction.
Restriction.
Where is this thing, sir? Where is the Q&A? Let me see.
That near to that chat box, sir, right side. Down.
There is a question mark in the nearby icon. There is a question mark.
The question. No, I'm not able to see it here.
More, sir, you have seen 3 dot icon?
Yeah.
Near to chat box.
It is called as annotate, but it's not as question. Annotate. Share pause.
sir, next to that chat icon,
Okay. Right.
there is a, yeah.
I got it, sir. Okay, so this is there any restriction? The same percentages I've already answered. Okay. And
I think only 2 questions.
only 2 questions, is it? Okay.
Yeah.
I think not many questions, I think. Lord, I think
Company cannot
They can ask.
tax representation assignment, is it true, sir? See, no. Tax representation we are not talking about. This is just a general discussion we had here. Definitely, tax audit you can be. You can be a tax auditor, no doubt about it. See, tax representation would depend upon, again, whether you're the statutory auditor or not. As a best practice, ideally, don't do representation if you are the stat auditor. That's what the provisions are going to come, right? If you're the stat auditor, don't do the representation. Otherwise, if you can do the representation independently, no problem.
So in that case, what you are saying, we cannot go for the hearing. Is it?
Yeah. Again, this is not a specific ban in the Income Tax Act and all, just as a matter of good governance, that's all. Because many people are saying you will advocate for the client only.
Yeah, but in income tax matter, what we have audited and what we have certified, we have more knowledge than any other person who is coming and arguing. So
Undoubtedly.
I am arguing for myself. It's not for. I mean, what I am certified is correct, or Form 3CD or a tax audit report. So
Yes.
is it fair to us? Like
No. I mean, I agree with what you are saying. See, sir, there is no, as I said, there is no provision as such, right?
Okay.
But what is happening is that now, as you just said, you know the client's case the best. Okay.
Yes.
So you are going to defend that's why that advocacy threat comes in from there only. You may the threat seems to be that you may not look at what the other person is saying at all. But as I said, this is not a law as such, but this is only as a matter of what we call as good governance and all these things, right? Right now, nobody can prevent you. You can definitely ITAT. You can definitely go. ITAT. You can definitely go. Even GST, for example, once the GST TAT comes in, you can definitely represent this thing. But these people are saying that it is, if you are the auditor and all, and it will probably not meet the threat of, it will not meet the advocacy requirement. I just put in that as a provision, that's all. There's no ban as such.
Okay, sir.
Okay, I think that's all. No other questions? Okay.
I think nobody is having any questions, sir.
Very good, sir. Either it was, very confusing or it was very interesting. One of the two things. I think Salita just put independence, that's all.
But I think it is a very lucid and very good presentation. I think covering all the challenges as well as a good governance of the good procedures that we have to follow as a charter accounts in our audit. That is, you are covering all those things. I think covering different the case laws and decided cases and everything. It was something very interesting and it was very nice. But I don't know how much people appreciate all these things. I think because the time of audit, no, at the time of audit, it's all individual priorities and it is going on. No? Yes, sir, it's a very nice of you. I think the moment I saw the article in the Business Line, what I thought, I was having the impression that you are only going through this GST. Some of my friends were also telling the same thing. Now you're basically dealing in GST. Then, but I thought that it was a good article, which I felt it was a very good article and it was very informative also for us. I don't know how many of us have gone through it, but it was interesting and excellent. Once again, I thank you, sir, for your
Thank you, sir. Thank you so much.
And for official vote of thanks will be given to the secretary and other things.
Thank you.
Thanks, sir. Over to Josh, please. Yes.
Thank you, Mohan R.Lavi, sir, for that wonderful presentation on the independence of auditors and reporting. Of course, now the stakeholders, even the government or shareholders or the financial institutions, they are looking our audit report or depend on our audit report very much. The quality of audit report will be depend on the independence of the auditors. That's sure. So what you said, the professional skepticism is an important in addition to integrity and objectivity to make auditors independent and make the audit report very meaningful and without any bias. So thank you very much, sir, for your deliberation on this subject. Very detailed deliberation starting from instant case, instant cotton mill case to almost all the details like including the NFARA till the details of NFARA. Thank you very much, sir, for that wonderful deliberation. On behalf of Ernakulam branch,